It's Wednesday, March 10th. This is The Street Live. I'm Katherine Ross, and Jim Cramer is off this morning. So Jeff Marks, Senior Portfolio Analyst with Action Alerts Plus, joins us. Jeff, let's start it off with the markets. What are you going to be watching today?
Well, look, I'm still not sold that this rotation into the more cyclical value names is quite over yet. I know yesterday, very strong rally in tech, NASDAQ up about 4%. So what I would use today, I do see some tech names trying to coming down a little bit, starting to soften up. What I would say is, look, I would say even though I don't think the rotation is over, you can still continue to try and pick some spots in some of the more higher quality names in tech, some of the market share leaders in tech, ones with good profits, a good outlook, one that is really dependable, that has been beaten down. For example, we added some shares of Salesforce yesterday over at Action Alerts Plus. Now, this is a position we've owned for such a long time. We actually sold the majority of our position at much higher prices back over the summer after the stock just went absolutely wild after it got included in the Dow. And then you might remember that they reported a true blowout quarter shortly after that. But look, we were looking at the stock down 25% from its all-time highs, trades at 8 times forward sales. We know this is a company that consistently grows about 17 to 20% year after year on the top line. So that looked attractive to us to nibble at. But at the same time, because we do think that this rotation might still keep going, we also want to make sure that we have a very strong weighting to those more cyclically oriented names. So to that point, we actually initiated a brand new position in our favorite railroad operator yesterday, and this is a company that reported a record all-time quarterly operating ratio in the fourth quarter through the implementation of precision railroading, which is just making every single railroader so much more efficient than they were prior to this new to this strategy. And so we think this is all going to translate this really strong operating efficiency to significantly better earnings power as the economy accelerates this year. And what I like about this stock, it's been flat and consolidating since October. And so we think that this is a reopening play that really isn't chasing this reopening rotation, so to speak. I like that. So we're going to be talking about this more over on our AAP call shortly after this. And if you're a subscriber, obviously you know this is a bullpen name that we've had and we started a position in yesterday. But it's one that we like, especially as the economy is poised to accelerate this year and with strong growth in the next couple years to come.
So, Jeff, between the SolarWinds attack, the Microsoft hack, and the Tesla Verkada security camera hack, I think that cybersecurity might be another sector that is at the forefront of investors' minds right here, right now. What is your advice when investors are looking to pick a new cybersecurity stock for their portfolio?
So I think in general, just another hack like this is another example of how businesses cannot skimp out on their cybersecurity budgets. I would say right now, cybersecurity and digitization are probably the two most important investments right now in IT spending. So that digitization side also goes into the Salesforce thesis that I just mentioned before. But my favorite two ways to play cybersecurity right now on the enterprise side would be CrowdStrike and Palo Alto Networks. What I also want to point out is that there was a pretty large transaction in this industry announced earlier this week when McAfee announced the sale of its enterprise business. Now, this deal looks very similar to the Symantec sale to Broadcom that occurred in late 2019. And one of the industry repercussions from this deal was that Broadcom emphasized profitability over market share. So that allowed a lot of the fast-growing players like CrowdStrike to significantly increase market share in 2020. So you could see a similar type dynamic play out on this deal too. So that would also clearly benefit CrowdStrike. The way we've been playing cybersecurity over at Action Alerts Plus is actually on the consumer side, and that's through Norton LifeLock. And look, it hasn't really been a great investment, but we've always viewed the stock as a great value play because it trades at a teen earnings multiple. It's a solid free cash flow generator, and it pays a good dividend. So I would say if you're looking for more of the growth side, I would point to CrowdStrike or Palo Alto Networks. But if you want that pure play consumer that is more value oriented, then Norton LifeLock would also be an example.
Looking specifically at Tesla, Jeff, one story that we haven't really been able to look at, aside from Tesla really rebounding following that tech sell-off and now the huge rebound that we saw yesterday, is the secret mega battery that Tesla is plugging into the Texas grid. So when can investors start to really spot buying opportunities in Tesla now that we've seen it kind of rebound?
For buying opportunities, I would say you don't look. It's much easier to do it not on a day or the day after it rallied 20%, like what we saw yesterday. So if you really believe in the company, you want to get it when everyone is kind of rushing out the door, and that would be an opportunity to buy into weakness. But what I would say in large is that no one's going to question Tesla's leadership in V. No one's going to question their leadership in batteries. But from a valuation perspective, I still kind of have a hard time wrapping my finger around this one. And that's why we really like, as a way to play autos and the EV space over at AAP, is Ford. And look, it's our largest position in the entire portfolio because we were aggressively buying this one into weakness in December. And we actually had to trim our position Monday out of prudence because the stock has been such a significant outperformer year to date, over 40%. That our large position, it just made it way too big for the portfolio. And we never like our portfolio of roughly 32 stocks. We don't like to be beholden to one single stock. But look, I would say even though we trimmed, it's still one of our largest names because we are staunch believers in CEO Jim Farley and the turnaround that he and his executive team are orchestrating there. Whether it's restructuring out of money-losing regions and improving profitability and cash flow generation, focusing on selling high-quality brands like the Ford F-150, the Mustang, the Bronco, or really securing Ford's future in EVs and in autonomous capabilities. The company announced they plan to invest at least $22 billion in electrification through 2025 and $7 billion in autonomous vehicles. So I continue to like Ford in the EV space.
So let's speak about another name within the Action Alerts Plus portfolio, and that's Disney. Disney Plus did top 100 million subscribers, and this comes just 16 months after the streaming service was launched. How important is Disney Plus going to be to Disney in another 16 months?
Well, look, this is just an incredible feat, and with so much new and exciting content coming to the platform this year, if they are as big of hits as The Mandalorian was, as WandaVision was, two shows that I watch and I liked a lot, then I would say that the Disney Plus, they'll have a stickiness to it. So that would allow for even stronger pricing power in the future, which is great. But what I would say is outside of streaming, my working thesis in Disney right now, this has been this for a while, I really think the parks are going to come back big. So right now, you have the average U.S. consumer has increased their savings during the pandemic, and we'll likely see spending habits shift towards experiences and away from goods once it becomes easier to travel and it becomes more feasible to enjoy activities in the public space again. But so this is why I really think Disney's going to come back strong. So, and it all comes back to the Disney Plus. So with so many young and growing families streaming Disney content for hours upon end during the pandemic when they were stuck at home, what else was there to do, right? 100 million global subscribers speaks for itself. The numbers speak for themselves. So what all that streaming has made possible is that so many kids of these families, they've just absolutely fallen in love with this iconic brand and the characters, whether it's Marvel Comics, Disney princesses, the Pixar movies. So I think with the economy reopening again, how are you going to make those kids happy? Take them on a trip to a lifetime at Disney World or Disneyland. So I think all of this kind of circles back into why I think Disney is one of the best ways to play the economic reopening. Not only do I expect the theme parks business to bounce back in a big way, but you have the Disney Plus, new content coming on the platform, a subscriber base that continues to grow. We're going to see some really great pricing power. They already plan to increase prices in the near term, but I think just going forward as more content hits the platform, it's just going to be a very sticky product. It's going to be one of the bundles that's a must owned. So I think they'll have good pricing power in the future.
And another good reopening play that our colleague Jim Cramer tends to like is actually Boeing. And despite him being off this week, he has been taking to Twitter to specifically talk about Boeing and what he likes about it. Now, this is a stock that is also owned by Action Alerts Plus. And Jim says that he expects upgrades on the company now. So with that, Jeff, give me a sneak peek into how AAP is going to be approaching Boeing.
So I think the numbers that Jim is keying off of are the February numbers that Boeing announced yesterday. 82 aircraft sold in February with only 51 cancellations, 22 deliveries with 18 being from the 737 MAX, which is moving and being delivered very fast. So that's going to be very positive for free cash flow. And then remember, China hasn't even approved the jet yet. So if and when regulators there do approve the 737 MAX, you could see even more orders come in and more deliveries pushed through. And what I would add too is that Boeing also, believe it or not, it represents a play on higher oil prices. We were talking about this, I think we were talking about this earlier Monday in the week, because those new planes are more fuel efficient. So if you're an airline looking for ways to generate incremental cost savings, you can do that by upgrading the fleet. And interest rates, yes, they're rising, but they are still quite low on a historical level. So even if you have to borrow to raise that money, you can make it up for with those cost savings. And then with travel set to rebound too, Boeing just represents a great play as well, because these airliners, they're going to have to build out capacity to meet this huge amount of pent up demand to travel. So that's where Boeing fits in. And yes, it's Boeing and Disney, I would say, are two of our favorite reopening plays in the portfolio.
All right, and with that, we are now heading over to our Action Alerts Plus Daily Rundown show over on actionalertsplus.com. We will be hitting on Wells Fargo, Eli Lilly, and as Jeff said at the top of the show, the new initiation that you guys have. I'm very excited to talk about it. So with that, thank you for joining us today. I'm Katherine Ross, and we'll see you tomorrow.